This is Kasama Lee, your community realtor. Well, hello there, community. This is Kasama Lee at Remax Gold. I am excited today to have our guest speaker who I have been working with, and we have served some families together, and just somebody who's really competent, highly competent, and very client-centered, which is very much our philosophy. So help me welcome Mr. Carl Lewis of LRG Lending. How are you, Carl?
I'm doing great. Thank you, Kasama. What a nice introduction. I really appreciate that. And I've just enjoyed working with you, helping families too. I think we work really well together because we have the same, we're aligned in values and how we want to serve the client. And so I have to just, also, give you the credit too for just being so competent and hardworking and just doing a great job for your clients too. So it's always great to work with professionals like yourself as well. So thank you so much. I appreciate you having me on the on your show today.
Well, thank you. Wow, a show. Seems
Show, yeah.
very official. The producer is me, the director is me, the interviewer is me. It's still a show, right?
Yeah, of course.
Okay, so tell us a little bit before I have a few really juicy questions for you. So everyone, you want to stay on till the end because there's some really great insight that Carl's going to share with you about the lending industry. It's been such a changing industry right now. But before we do that, I'd love for you to share briefly about your company, how many people are on your team, anything you want to share about, what you specialize in.
Yeah, so we're a local mortgage broker and lender in California. We're not tied to anybody. We're totally independent. I'm the owner. My wife and I are owners actually. So, we're a mom and pop business. I'm pop, she's mom. And
Thank you for that
so,
clarification.
yeah, yeah. And so we're really a boutique lender. Our whole business is built around the client experience and helping borrowers not just get into homes, but offering the same level of service and products that I would want if I was buying a home as a consumer. And so that's really been the baseline of our business and how we've set up our systems and built our team. We've got 6 people on our team.
Nice.
We all work together in harmony to try to make the experience efficient. We set the right expectations. So that's really, who we are. I'm a husband. Obviously, my wife's a business owner too. We have a 9-year-old daughter, and we really love working together and running this business and being part of the community. So.
Right on. Awesome. And it's just really cool because how I met you was you actually were working on a loan for my clients, but the seller's agent actually had worked with you for many years and had highly recommended you, and your pricing and all the things beat out what my client had, and it was a VA loan. So that was really cool. So you left such a great impression, and I think it's important for all the professionals to really not take that for granted, that you're as good as how you ended up, how you ended the last transaction and your reputation. So right on. I'm so glad that we've been able to work together since then.
Yeah, thank you so much. I think reputation is really everything in business, and it's really not just reputation, it's the relationships.
Absolutely.
So having and in business with clients and business partners like yourself, the relationships are really that's what fills me up. Actually, that's what I enjoy about the business too.
Yes.
Is the relationship. So really life and business all is woven together for me. And I know that's how it is for you too. So yeah, another reason why we work well together.
Yeah, I think now it's just with the way the industry has been just so up and down, especially 2024. And there's so many of us, every third or fifth person you run into is licensed to do real estate or loans. So it becomes, you really want to just hone in on the people who are made of the same cloth, where we would serve clients in the same way with their best interest in mind, and actually have the skills, behind it. So we're not just talking, we can actually execute behind what we say we're going to do, right? My first question to you is, with the way, interest rates have been quite interesting. It's gone from 8 to 6 to over 6 to whatever. I don't even know where we are right now. But I would love to hear what are some creative programs or ways thinking out of the box to be able to get prospective borrowers into an approved loan that actually the numbers would work for them?
Yeah, so, I know we've worked on this, this one strategy quite a bit together. Probably the best strategy right now is a temporary rate buy down. And
Mhm.
there's a couple different types of buy downs, right? There's a permanent buy down and a temporary buy down. A permanent buy down, you're buying down the rate and you're buying it down forever. But you're paying a lot to be able to buy that rate down forever. So it's
Mhm.
pretty expensive. And then if you refinance, you won't get back what if you haven't recouped everything that you paid on that permanent buy down, then you'll lose money. And so the temporary buy down is just like it sounds, it's temporary. So the rate is not forever. You're getting a lower rate, but it's not forever. The
Mhm.
most common temporary buy down is a 2 year. We could also do a 1 year. Actually do a 3 year. 3 year is pretty rare, but 1 year or 2 year are kind of like the two we see pretty often. And it reduces your monthly payment significantly when you
Mm.
do the temporary buy down. So that's been the most popular solution, even though it's not forever. And here's why. So there's a lot of, and I think there's just a lot of uncertainty and a lot of fear about interest rates because rates have gone up so much and people are maybe worried that they're going to go up more. And they might. They may temporarily. We have the election and there's been a lot of good economic data that's kind of come out.
Mhm.
But we've also got the Fed, and the Fed has already done their first rate cut, right? So we've seen that's not mortgage rates, but they are correlated. There is a relationship there. It's
Mhm.
just not direct. So if you look at what the Fed's plans have been, in the past and what they're basically projecting to do in the future, there is a high probability that we're going to see interest rates come down in the next few years. Now, is that guaranteed? No, it's not guaranteed. But
Mhm.
actually, I went back. I subscribed to a couple different news services, and so if you look back at the last 40 years and the rate cutting cycles that we've had 9 of them since 1984. And
Mhm.
in those rate cutting cycles, the interest rates have come down almost every single time significantly. So 30 to 40% reduction in rates. So if history repeats itself, we're looking at mortgage rates are, and now again, it's not guaranteed, but there's a high probability that rates are going to come down. So kind of dovetailing back into the temporary rate buy down, well, if rates are going to come down, be a high probability, and you're able to take advantage of getting a lower monthly payment today, even if it's not for a long period of time, and then you could refinance here in the next couple of years, then there's a significant benefit to that. So just to kind of put some color to it, I actually have a little buy down calculator that I put together. Now
I
every
love
scenario is going to
it.
be a little different. Yeah, so just I know that was a lot to digest, but so I wanted, put some numbers behind it so you guys can see.
That's awesome.
Okay, so tell me when you can see that. Can you
There
see
we
this
go.
here? This buy down
Mhm.
calculator?
Yep.
Yep.
Wow,
Okay.
you like did this yourself,
Well,
like
yeah.
your
Well, actually,
spreadsheet.
and this is we have one really good, really great wholesale lender that we work
Ah,
with,
okay.
UWM.
Mhm.
We have many others. I think we have 30 different investors, but this is a tool that they created, and it is pretty awesome.
Mm.
So I plugged in all the information, and we're helping Taylor Swift here.
We love that
I have a
client.
9-year-old, so and you're representing Taylor here, Kasama.
Hey, hey.
Yeah, so we've got the loan amount here of 500,000, purchase price is 625. So I just assumed a 20% down. Of course, first time home buyers can do 3% down.
Mhm.
And then we've got, 5%, 10%. So there's a lot of
You
different
said,
scenarios to do.
wait, sorry. You said
Huh?
first time buyer could be as low as,
As 3%. So
oh,
first time
did you guys
home
know
buyers
that?
actually, yeah, that's a benefit. First time home buyers can do 3%. But I just
Ah,
did 20% to make things really clean and easy to understand.
sure.
And then I did your going rate right now is right around 7%. So we did 6.999. Rates were all the way down into the high fives, just a couple months ago. So, another reason why I wouldn't be surprised if rates, come down going into the spring.
Yeah.
But this is where we're at for right now. So let's say that you do this, you purchase a home right now at 625, $500,000 loan. Now, this is just the principal and interest payment. This does not include the taxes and the insurance. And the taxes and the insurance would probably be another, let's see, like $750 or so per month in this scenario, which I could go into that if you want. But just principal and interest, the payment would be 33, 26, 18.
Okay.
Well, if you do a temporary rate buy down And I'm going to start with a 1-0 buy down. So a 1-0 buy down is now I'm going to say the seller has to pay for it in most cases, but the seller's buying down your rate for 1 year. And they're buying down the rate by 1%. So they're buying it down for 1 year and they're buying it down for 1%. So instead of 6.99, your rate's going to be 5.99. Well, because you're getting that 1% reduction in rate, you're going to save $328.75 per month
Wow. Yeah.
for that first year. So now your payment is only going to be $29.97. And the cost for the seller so you do have to ask for a seller credit. So you need obviously, Kasama, you're awesome. So, you can maybe try to negotiate that. We are seeing that a lot of sellers are paying for this stuff. So it is pretty common right now where the buyers can ask for a credit and they could get it. Not every house is going to be the same. Some will get more offers, some will get less, but we are seeing where buyers are getting this. So you would then be asking the seller for about a $4,000 credit. So $4,000, you're getting a credit and you're applying that to buy the interest rate down and get that payment savings of $328.75. Now, let's say, or do you have anything to add to that, Kasama?
I actually have a question because I
Sure.
don't know so the best thing for me as the real estate agent before I write an offer, and let me just speak a little bit about asking seller for credit, depending on, so this is where you gotta, like, the borrowers need to, like, follow the lead of the real estate agent, because sometimes the asking for concession for the seller to credit, you have to raise the price to get that if they're fresh on the market. If they have been on the market for a while, then there's room for negotiation. So just know that there's a way to do that, but you need to kind of work with your real estate agent on that. But my question is, how do you come up with the $4,000? Like, what's the correlation of the 1% to which amount? So should I just call you every time before I write so I know what that buy down amount is? Because I don't know how to calculate it.
Yeah. So, and thank you so much for pointing that out on
Sure.
working in the temporary buy down
Yeah.
into the price, because that is something we talk about that usually, even if you don't, like, if you have a meeting of minds with the seller that you're going to pay a certain price,
Mhm.
like, usually there's a way to still work in the temporary rate buy down credit, because you could just increase the price. So if you need a $4,000 credit for the temporary rate buy down, and you've basically have a handshake agreement that you're willing to pay 500,000, or in this case 625, but the you guys are at the same price point, and then you want to increase the price, you could just increase the price by $4,000. And
Right.
then the seller's not losing anything because they're giving a credit, right, for that 4,000. But you're already paying $4,000 more in the purchase price.
Right.
So
Right.
yeah, and I might have said the purchase price was 500,000 on this one. I'm so sorry. The
That's
purchase price on this scenario is actually 625,000. Sorry about
okay.
that.
Right.
The loan amount's 500,000. But yeah, and then how do we calculate the amount of the temporary buy down? It's actually really simple. All that's happening here, all a temporary rate buy down is, it's the seller's giving you money as a buyer, and it's getting set aside in a separate account, like an escrow account, and it's just supplementing your monthly payment. So like your actual monthly payment is
Oh,
3326.18 per month, because it's based on your rate is 6.999. That is the rate. Like, that's the rate on the loan. But then for the first year, the seller's saying, hey, we're going to help you out. We're going to give you $328.75 per month for that first year, so that you don't have to pay the 3326.18 anymore. You only have to pay 2997.43.
I see.
So
Okay.
they're just supplementing that every month. So your rate and your payment, really, truly, the note rate's still 6.99 and the payment's still 3326. So it's just a temporary reprieve
Got it.
until the temporary rate buy down's over, and then it's just going to be the monthly payment based on the note rate for the life of the loan,
Got it. So
right?
as you were talking, I was like punching it into my calculator just so I could follow you. Okay, now I
Yeah.
got it. I understand.
Yeah. Okay. Yeah. And that was a great question. And I think that's important to know, that it's just a very simple thing. They're just giving you credit to help cover the difference on the monthly payment every month.
Got it.
But it solves a really good problem, because if we believe that rates are going to come down the next couple of years, and that's what's happened in history for, like I said, last 40 years from these Fed rate cuts, and that does end up happening, then you're able to take advantage of the lower payment now for the rate, the lower interest rate that you're probably going to be able to refinance into in the next year or two. So this was just a 1.0 buy down, which is a great way to go because the next year we should see a pretty good reduction in rates. But I also like the 2.1 buy down. I think the 2.1 buy down gets talked about a lot more than the 1.0 buy down. So the 2.1 buy down's here. I have the 3.2.1 here too. But yeah, the 2.1 buy down is here. So then the first year rate, instead of being 5.999, it's 4.999. And that 4.999 rate, it saves the borrower $642.38 per month for the first year. So it's huge savings, right?
Yeah.
If you were to spend the same amount of money on a permanent buy down, you wouldn't get nearly the monthly savings than you do on a temporary buy down. So the temporary rate buy down, bang for your buck, as far as like the cost of it, goes a lot further. It just doesn't go forever, right? Hence
Right.
temporary. Now the total credit that you'd have to get from the seller on the buy down, on this one it's more. It's 11,653. So you have to ask for a $12,000 credit, which is pretty big. But we're seeing this too. We're seeing that sellers are paying 2.1 buy downs. So let me go back actually. So we had the 4.99 for the first year. The monthly savings was $642.38 a month.
Yeah.
So the monthly payment's only $2683.80 a month. And then in the second year, the rate then bumps up, hence the 2.1. It bumps up to 5.99. And then the monthly payment bumps up to $29.97, which is the $328.75 savings per month. And then in the third year, then it would go to this payment here, the $3326.18.
Right.
So then, and this is all just principal and interest without taxes and insurance.
Sure.
But
But this
as
is
you
where
can
hopefully
see,
the rate has floated down and they can just refi at that point, right?
yeah, exactly. And we have a program. It's our refinance warranty where we waive the upfront lender fees, so we don't charge the borrowers that we helped purchase the
Oh,
lender fees up on the front end, so that way they're not getting double dinged on the cost, because we think there's a really high probability that they're going to refinance. So we're trying to help people be positioned well for that refinance and hopefully not, have too much cost up front and use tools like the temporary rate buy down to be able to get that monthly payment. Now, keep in mind, we're still qualifying buyers. So this isn't, I mean, I've been in the business since downturn, 20 years actually. I just hit my 20-year anniversary. And before there was a lot of qualifying that was just a lot different, or lack of qualifying then. We still qualify everyone. You still have to meet the certain debt to income ratio, and we have to sometimes have reserve requirements and credit scores, and we're verifying employment. So you're still as a buyer, you're still qualifying at the note rate. So just because you're getting the temporary rate buy down, you're not qualifying on that. We're not putting anybody in a bad position financially to be able to make payments on loans. I just want to point that out.
good point.
Sometimes people will go, oh, is this an ARM? Which, nothing wrong with ARMs. ARM is an adjustable rate mortgage. Nothing wrong with that product, but this is not an ARM. This is a fixed rate mortgage where you have layered in. That's how we typically do it. Fixed rate mortgage, and then you're just layering in the temporary rate buy down so that buyers can get that lower monthly payment for a year or two.
And
So
I just caught what you said, and I want to make sure the audience hears it. You said that if they originated this loan with you with the buy down program and it's time to refi, you would waive the refinancing fee. Is that correct?
yeah, we would waive our lender fees like underwriting, processing, closing.
Wow. That's
Yeah,
awesome.
so a lot of the stuff that gets charged on the front end, we waive that just because really our goal is we want to keep our customers and we want to take
Yep.
care of them. And so that's a way to, help people save some money and be able to refinance as soon as it makes sense. We also don't recommend a refinance if it does. I have a lot of people reaching out right now. Oh, I heard rates dropped. Is it a good time to refinance? I'm not a believer in these big rate buy downs to do a refinance. Like that would be a permanent buy down. I
Yeah.
think refinances should be very inexpensive because you might refinance more than once. I call it a pit stop, but I've been through this type of market cycle a few times, and a lot of
Yeah.
times people will refinance twice. So, and you don't know where the bottom is. So like if, say you have 6.99 and you're able to refinance it 5.99 or 5.75 and then but do it at very low cost or no cost,
Yep.
then that's a good little pit stop. Hey, you guaranteed yourself that lower rate and
Yep.
payment. And then, maybe rates come down more. There's a chance that rates could even come down to five or in the fours. Well, then you'd
Yep.
go ahead and look at doing another refinance at that point. And again, hopefully do it with very low cost.
Right on.
So
That's
yeah,
so
that's
awesome.
my philosophy anyway
Yeah.
on rate and term refinancing. So
Yes. No, I love it. I love it. Thank you. I
yeah,
mean, it's
yeah,
at the end of the day, it's how do we best serve our clients, right? For the long term.
yeah.
Not just it's not a transactional relationship. It's really I'm pretty sure that you're kind of you view this the same way. They become the transaction when it ends, that's when the relationship really begins. Like I feel like I'm like, "Oh, thank you, God, for all these new family members that got added into my world because through, the real estate transaction." And I think that if we operate from that place of what we would do, we would take care of our clients the same way that we would take care of our own family members. It's like there's so much joy, so much more joy in the world because this industry has enough stress of its own. Would you agree?
Oh, 100%. And I like how you put that, I don't know, I believe that not just, that the relationship begins really at the end, but also that God brings people into your life for a reason. And whether it's your
Yes.
clients or whether it's just an acquaintance somewhere or whatever, like everybody is kind of brought in and we get to spend time with people and it's a blessing on us too, right? Like I have learned so much from the clients and people that I've been able to work with and business partners like yourself. So that's always the mindset I look at is it's all about the relationships
Mm-hmm.
and that's where, even like the refinancing thing, like I just always want to keep the client relationship at the front of what I'm doing, just
Right.
like you. So,
Yeah.
yeah.
Awesome. Whew, I love this. Okay,
Yeah.
next question. So, I know that in this past year, we work more with sellers, but we have a handful of buyers that have just sort of went and sat on the fence because of the interest rates volatility this year. At which point, or what would you recommend for, somebody who's been renting and they're just waiting for the right time and they don't know when that is? Like how would I suggest for them to sort of revisit the numbers or whatever that needs to be for to see if it would make sense for them to leave their what because the way I look at renting is you're paying somebody else's mortgage, right? When you're renting. I mean, somebody else is collecting your money and you take care of their mortgage. Why don't you take care of your own mortgage? So
Hmm.
at which point does it make sense for somebody who's been renting to start or be looking into buying or what do you say to them or what do you do in a glimpse?
Yeah. So I will start with if it's something that a buyer or seller, or someone's looking to they're considering buying a home,
Mhm.
going through the pre-approval process and just getting all the data. Because I feel like any big decision, the more information that you get and the more data and the more research, I'm very analytical about things, maybe to a fault sometimes, but like I feel like the more information you get, the better decision you're going to make. So it's
Right.
my job is to help get all of that data so that home buyers can make a wise decision. And I think that a lot of times they're surprised at, oh my gosh, I got the process started and there's a way to make this work. Sometimes all the pieces do just fall together. But
Yeah.
even if they don't, then it's like, okay, well, what do I need to do to get prepared to buy in the future? And I'm
Mm,
not a big fan of like being in a hurry. That's one of the things that I always share as a buyer myself from when I look back and when I was first time home buyer. Like one is you don't have to be in a big, like you don't have to be in a hurry per se, right? It's not,
right.
don't ever feel like you have to make a decision because you're going to be missing out. Make a decision based on your current financial situation, have a budget, like actually do a personal budget. That's so important. My wife and I do a personal budget. We review it every month. So do a personal
Nice.
budget, figure out where you're at, and then, sometimes the mortgage payment's a little higher than what's in your budget, and you've got to like, cut back on a few other things and
Stop
make
drinking
that
those
mortgage
fancy
payment
coffee.
work. Yeah, exactly, right? Yeah, the latte factor. There's a thing, right?
Hmm. Yes.
And so, really figuring out, and that's where we come in, and there's a lot of other great lenders and brokers too, but that's where a good lender, a good mortgage broker is going to be able to help you figure out, hey, where does the mortgage fit into that personal budget? And
Mm,
so that you can accomplish that goal of being a homeowner. And there's no doubt about it, being a homeowner there's a tremendous benefit. I don't know all the stats, but I mean, they talk about generational wealth and, all the thing there. And it's pretty mind blowing how much of a difference it makes to be a homeowner versus not being a homeowner. So I think there's no question, like if you can become a homeowner, that's going to help you in the long run as far as your net worth, but you don't want to lose sight of like what's in your budget. So I think that's really important. So that's kind of a timing thing. And then I also think just, was kind of staying with the budget, like buying what you need, like it's baby steps. Usually, especially if you're a first-time home buyer, you're probably not going to buy your dream home the first go around. And
yeah.
so just having that, and I know that's more on like on the real estate side, but it does kind of connect to the budget. Because
Hmm.
if you're trying to, everything has to be perfect on that first purchase, then usually that's going to equate to a higher monthly payment, and that might not fit into your budget initially. And a lot of people who end up in their dream home, when I've seen it time and time again, they buy something, they get their foot in the door, they maybe don't have a big down payment, they start building equity, and
Hmm.
then a few years later, then they sell it, they take those proceeds, they plop it down on something that meets their needs a little bit more. Maybe they do that once or twice, and then voila, now they're in their dream home because they built equity from, that original home purchase.
Yeah,
Um,
they
so
wouldn't have that down payment. Like I tell my clients, there's no other way. Like you cannot grow the money the way that you can in real estate in 5 years, 7 years, 8 years, or whatever. And it's a springboard for you to be able to get into that because now your kids are bigger and you went from one kid to 5 kids and now you really need a bigger house, but you couldn't have done that if you didn't have that starter home. And I just want to share this with you because that was like music to my ears. And I'm glad that you said all of that because I started out my career with a lot of clients who like bought their home for the first time. And this recent client said to me, they said, "Do you remember?" Because now they're selling that house, right? And they're buying a bigger house because now they really need a bigger house. They're like, "I still remember the day that we got the keys. You said this is your starter home," and she said, "I was like, oh, you mean this is not our forever home?" And I said, "Well, you just wait and see." And here we are talking about that next bigger home, and they're like, "Now I understand what you like." The fact that they remembered and the fact that I actually said it made me feel like, okay, we set this up so that you can succeed to a bigger house. So anyway, just wanted to share that.
yeah, no, I love that. And there's those stories time and time again, right? Where you're just seeing it happen. And like if as far as the timing goes, I mean, I could give examples like 2016 we thought was the top of the market, and then
Mm,
2018 we thought that was the top of the market, and then 2020 we thought was the top of the market. And it's like over time, you can't time the market. You
no,
can't, nobody knows what's going to happen,
that's right.
but we can look back at history, and we know that over time that real estate has been a good long-term investment. So if you look at it that way and you focus on your personal budget, it's so from a timing perspective, I think just buying when you're ready and not focusing so much on the market, and then looking at the tools that are available to you and trying to navigate because the market's always changing. I mean, I say this a lot, like with like this temporary buy downs or credits or we haven't talked about it yet, but contingencies. There's been most of the time, actually, I would argue, it's a market where there isn't the same flexibility that you have right now as a buyer. Like you
Mm,
can't ask for these types of things in every market. Some markets like 2020, 2021, I don't think temporary rate buy downs would have been an option. I think
it would
sellers
have
would have
been
said, I've
out
got
there.
10 other offers
Yep.
and I'm sorry, but yeah, I don't really want to do the credit. You know what I
Yeah.
mean?
It's more like take my offer, take my brand new car, take all my furniture, and please take my offer just so I can get the house at 2.5%, right? But it's like that was just, I mean, we don't need another pandemic, but I keep telling people, I said that market doesn't, it's not even part of the cycle. Okay.
Yeah.
It was a global disaster that caused that craziness, but we don't really want that to
But
be the
even 2019, do you remember the transition of 2018? 2018 was a tough
Mm,
year. Rates got up to about 5%, which at the
Oh,
time,
so high.
which sounds low now, but it was so high
Yeah.
and it really kind of stagnated things. And then 2019 rates dropped and the market really took off. And I'm
Oh,
feeling a similar kind of situation where I think if we saw the rates drop down and maybe if the sweet spot is that 5%, 5.5%, that the
mhm.
market could kind of turn on and then the dynamics would be a little different. Now, it's not to say you wouldn't be able to get, depending on the seller and stuff, you wouldn't be able to get credits, but that dynamic's not always going to be the same. It's definitely going to change, even
Yeah,
seasonally, right? It's wintertime, you go into the springtime, things are a little busier and more
right,
competitive, you know.
right.
So, yeah,
Yeah.
did that answer your question? I hope.
You did. I think we just got into the chatting because we just like sing the same song, which is a
Yeah.
good song. So no, I think yeah, you addressed it. One other question I have, you mentioned personal budget a couple of times for people as you work through their pre-approval. Is that something you, and I don't mean to put you on the spot, I just want to really get clear. Do you take the time to like go through the personal budget? Like, because a lot of like first-time buyers, what I'm real, well, most people actually, they don't even know how to budget. Like they've never had to. And then now they have to lean down so that they can afford to buy. And I tell them, it's gonna, if it doesn't hurt, if it's not uncomfortable, if it's not uncomfortable, if you don't feel that it's uncomfortable, you're probably not trying really hard to buy. And you tell me you can't afford it. So I would rather work with people who are truly committed and are willing to go, ouch, that hurts. But you know what? I'm getting a house, right? So do you help them with their personal budget and look through and see what, do you spend time on that? Or if you don't, okay.
Absolutely. Yeah. And it depends on what the client wants. Some people
Yeah.
say, hey, I got this. We do our own budget. I do have a couple different budgets, like just spreadsheets. And then also
Oh, okay.
I use a system called Mint. So there's systems online that you can use.
Hmm.
I actually, for the most part, we just use an Excel spreadsheet.
Yeah.
That's how we do it. Just pretty simple. But
Yeah.
yeah, I think, and here's a little, and this is my opinion, but I think the secret of budgeting is doing it. It's not that it's perfect. And I
Right.
think that that's the common misconception. And that's the frustrating part. People are like, oh, everything has to balance to the penny and like everything has to be perfect. And it's like, no, it's just because you looked at your bank statement and you're like, oh my gosh, like, why did we spend all this money on Amazon?
Right.
Like, we need an Amazon freeze or fast or whatever. We've done that. We've done Amazon fast. Or, oh my gosh, we went out to eat like 10 times this month or
Mm,
whatever. It's the act of doing the budgeting or subscriptions. Oh my gosh, we have all these automated subscriptions on Apple, and it's
mhm.
like $200 a month. And we're not even, I saw one where I
Oh,
had
that's
Dancing
really high.
Line was a subscription because my daughter's iPad and we had subscribed. It was like $7 a month. And I'm like, okay, it's just about doing it because
Yeah.
you'll trim a lot of fat
Yep.
on your budget
Yep.
by doing it. So
Yep.
what I encourage people most with budgeting is that just do it. Just jump off the cliff and build your wings on the way down
Mm.
because you'll learn a lot in the process and it doesn't
Yep.
have to be perfect. So
Yep.
I do encourage it. I help as much as I love helping, but yeah, it just depends on the client and what their needs are.
But that's good to know though, because that's an added service. That's not your job. It's like the stuff I do sometimes they're like, you do that? I'm like, yeah, because I want my client to succeed. So that it's in the same way, that's what you do to help them kind of come to a revelation, so to speak, of like, there's actually like whatever, $500 that didn't need to be spent every month that could be put into your mortgage, right? So I think it's good to know that you would do that for them as well. So as I talk to other potential buyers, sometimes they really don't know where to get started. And I can't tell you how many people would private message me thinking because I'm a realtor, they're like, I want to buy a house. And my next question, what do you think my next question is?
Have you been pre-approved?
That's right. I'm
Yeah.
like, I'm not even gonna touch you.
Yeah.
Not gonna look at houses until like it's a disservice. And
Yeah.
I would get them, and if they like don't show up to the call with the lender that I refer them to, like, different reasons, they're not committed, they're not ready,
Mm,
right? They just want
yeah.
to like say that they want to buy. And there's nothing that I could ever do if the engine, I feel like the loan is the engine, and if the engine is not like built, I can't get them the keys to the house. It doesn't matter what I say or do. Well, Carl, this has been such an awesome like chat, podcast, show.
Joe.
Yeah, show. Thank you so much for your time. Thank you for sharing your wisdom. Thank you for sharing your really generosity and your talking about your level of professionalism because the world needs more good professional people who are going to get our clients to win. So, any last
Well, thank
thoughts you want to
you.
share?
Just that I'm grateful too, and I know your heart is a heart of serving, and that's mine too. My wife and I wish she was here. You guys would love her. Everybody loves her. I
I
love
want to
her.
meet her. I want to meet
Yeah,
her.
you
I'm
will. You will
feeling
meet her.
better.
Yeah. Yeah.
Yeah.
Everybody's like, hey, where's your wife? And when I'm out and about, but I'm like, hey, what do I mean? No, I was kidding. No, she's amazing. But yeah, just having that servant's heart, I think that that is so important in this business because we're dealing with people, and that's what I appreciate about you. So I'm grateful to just have the opportunity to be part of this show, and just share, what I know in the business and what I've learned. So
Yeah.
yeah. Yeah. So
Well,
thank you.
thank you very much. And we'll be seeing you again. Maybe we'll do a part two, more advanced conversation, because I think this is a lot for any average sized brain to absorb. But I hope that this helps propel people who have been just sort of thinking about maybe is it the right time? I don't know. I have a bunch of questions and all the things. And if you direct your questions to me, you know what I'm going to say. I'm going to direct you to Carl. Like I'm not the lender. I don't have the expertise, and that part the engine has to be built before we can even talk about getting you a house. I will put how to contact at the end of this video, and when you do that, I will make sure that you get directed to Carl properly. Thank you so much, Carl. Have a great week, and I am grateful for you.
Thank you so much, Kasam. I feel the same. You
All
have a great
right.
week too. All
You
right.
too. Thanks.
Bye-bye.
Bye.